Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, July 22nd, 2022. You can see that I'm recording this on Saturday. It's been a wild weekend, so I apologize for the delay. Please don't forget to hit the like button, subscribe to this channel, share this video with others. So we'll do the same as always. We'll look at stocks. They ended the week on a hopeful note. High yield bonds also went up, so that's good for stocks. However, the long-dated Treasury bonds are also gaining, and we will see if that's something of a flight to safety situation. And notice that 1-year yield is now higher than the 30-year yield. I will try to do some fundamental analysis. I'm going to be first to admit that I'm not really great at it, but we'll look at intermarket analysis. So we'll see if the federal funds rate correlates with dollar stocks or commodities, because I recently got this email and I'm looking at this doom loops of yours. So dollar index versus the federal funds rate. Do we need to worry about it? So stay tuned for that. We'll also look at gold and Bitcoin as it trades flat for the week. If you're a subscriber, stay tuned. We will cover these stocks in a separate video. If you're not a subscriber, consider signing up by going to MasterChartsTrading.com. Sign up for one of the products. I have two products and 2 packages. I have the indicators, newsletters, and them together. So what are the indicators? The trading indicators are these lines in the chart. You can see green, blue, red, and yellow lines. They are available for TradingView.com. This is a TradingView.com interface where I'm hovering. The indicators are available for that interface, but you need to register on my site first, MasterChartsTrading.com. All right, so how do we trade using support resistance concepts? Looking at this chart as an example, this is S&P 500 futures up until relatively recently. And once again, I want to say that this is a daily chart. Notice where I'm hovering, it says 1 day. So each of these candlesticks, this green or blue sticks, is 1 day's worth of activity. Up until relatively recently, you can see that we had a breakout way back when, after the pandemic, I don't know, during the pandemic in April 2020, had a breakout for stocks, and stocks have broken out above this blue support resistance line. To me, this is all I need to know, and this means that we are now in an uptrend. Now, we've been in an uptrend for a while, and so notice that we had finally an opportunity here in January of 2022, this year. However, this proved to be very short-lived, and we eventually reversed into a downtrend. How do I know we're now in a downtrend? So notice on this chart again we have this yellow line, and the price closed below this yellow line, so that means right now we are in a downtrend. So bear market for S&P 500 started on April 29th of this year. From then on, we need to, I reverse my thinking. I think, okay, if we're now in a downtrend, we do not want to be buying. We want to be selling. And until there's a bottom, we will continue selling. And so selling implies we can unload our, if we say we have stocks, we hold stocks, then we can unload them or sell them. At what price level? We could sell them at the red line. Usually it's a pretty decent chance that stocks have rallied from the lows, and you can see there was a low here on 20th of May of this year. Then we had a rally. It petered out exactly at the red support resistance line. Now, aggressive traders can also do what's called sell short. So around that area also is a great place to sell stocks short. Exactly. The short signals worked out really well. You can see the big drop. You can also see how clear it is on the chart. You don't really need to have special education or any kind of, you don't need to really think, is this a triangle formation, or is this maybe a flag or a falling wedge? you don't need to think about it. You just need to look at the lines. Okay, so the lines are saying that yes, we're definitely in a downtrend because we have closed below the yellow line. We're also saying that we need to be selling short or just unloading our assets. This particular signal worked out really well. We had a low here on 17th of June, and now we are in the middle of a rally. So there is a good chance that the rally will continue towards this red support resistance line, currently at 4077. We can also look at the same chart on weekly time frame. So weekly time frame means that each candlestick is 1 week's worth of activity. It's the only thing that you need to do is when you use my indicators, make sure that you change the length setting to 52. So daily chart use 250 as length, weekly use 52 as length. Okay, so now our length is indeed 52. So we're in weekly charts. All right, so same general principle, but you kind of want to look at the weekly charts as well, because you want to know where the close is for Friday, and it's actually not bad right now. So we had a hammer candlestick from last week here on the 11th of July, week of 11th of July, and this week we had a pretty significant follow through. So overall, it's not a bad looking candlestick from this week. I mean, ideally it should be even greener. You know, there's right now a little bit of a shadow out of the top here, or a wick out of the top, but overall it's not bad. I mean, ideally it should look like this candlestick from 21st of June, week of 21st of June, but you know, we can't have everything. So overall it's not bad. Additionally, we have cleared this high from 27th of June right there. So it's good news. If you are at least playing it very short term, like for example from lows here, somehow you were able to get in on the, you were able to buy here at the bottom, and now you're just kind of holding on. So yes, there's a good chance we'll continue towards 4077. Now, last time we stopped there exactly in May, late May, early June. Will we do the same thing? Will we stop exactly there? So there is literally no way to know that. So we need to look at price action. Let's see what exactly happens, and we'll just kind of have to wait and see. Now, an alternative scenario is also entirely possible. We could just this could be the top, 20, from last from yesterday, 22nd of July. This could be the top, and then we just collapse to new lows. By and large, we're still in a downtrend, or rather, not even by and large. There was no switch into bull market. To switch into bull market, we need to close way higher. We need to get to 4369. See, above the blue line. So that is about, let me see how much still we need to go. It's about 10% higher. So it's not that much, but it is, a significant amount of distance to travel. Additionally, once again, there is significant resistance that's coming up at 4077. So let's wait and see what happens. Dow Jones actually is quite close to the red support resistance line. That's why I'm relatively optimistic right now that not only we will get to the red line, we might actually continue slightly higher, and we will again see what happens, but there is a chance we'll kind of continue higher, maybe top out somewhere in August, and then make a signal. So signal for us is something like what we just had here in late May, early June. We had a high or a close above the red support resistance line and a close below it. So we can see 3 signals here, or even 4 signals, and then a collapse to new low. So let's wait and see what happens. Maybe we'll get a high above the red line and then immediately we'll sell it. Maybe immediately we'll get a close below this red support resistance line, or we could see a close above it and then another close below the red support resistance line. So we just need to wait and see at this point. I think it's reasonable to expect some sort of a resolution somewhere in mid-August. NASDAQ, very generally similar patterns. NASDAQ provided for a nice short entry right there on 8th of April because it entered bear market earlier than the rest of the stock markets. indices. So if you are able to sell it short, around April or so, consider donating some of that money, for example, to the orphans of Ukraine war right now. That's something, I think it's a worthy cause. Right this instant, not very much different from Dow Jones or S&P 500. We're waiting to see how far we can travel up. Potentially we'll get to the red line, potentially we will not. As of right now, on a short-term basis, from June till now, I'm somewhat optimistic about the market. So again, this is an oversold bounce, or also known as a counter trend rally. So the trend is down, we're rallying against it right now. So when or if we get to the red line, it would be now an overbought condition. So if a stock is within a downtrend and is overbought, it is a great opportunity to sell it short. And then we will see if we will get signals. Russell 2000 was weaker than the rest of the markets. You can see that it finally cleared previous highs, especially here 28th of June high from, or rather on 19th of July. If you look at NASDAQ, it was the same thing on 19th of July, but for Russell, or rather for Dow Jones, you can see that we're stronger, basically, much stronger here. So we're approaching red line. Notice that for Russell, we just barely cleared the yellow line. So let's see what happens in the next few days. I am, at this moment, reluctant to buy or sell. I just want to kind of watch and see what happens. I am, however, somewhat optimistic again, because mostly of this chart, this is J&K, high yield bonds. So once again, I will very briefly will say that junk debt correlates. I apologize, there's extra here. So let's look at just this middle part here. Is Dow Jones. So this is a correlation of high yield bonds to Dow Jones. By and large, it's positive. So if Dow Jones is going up, junk debt should be also going up, and vice versa. If Dow Jones is going down, junk debt also normally goes down. It doesn't happen all the time, but it's something to go on. So junk debt made a new low on 13th of June. If we look at stocks, S&P, we made a low actually slightly later, 16th, 17th of June. So important, what I found important is here in late June, early July, we did not make a new low. And also right here on 14th of July, we did not make a new low. And then I'm like, okay, this is probably it. And then we did indeed rally. Now we're seeing potential shooting star candlestick right there today, or rather yesterday on 22nd of July of this year. But actually it's not that bad. It looked a little worse when it closed, before it closed, but now I think it was maybe after market action and it kind of rallied a little bit. So it doesn't look that bad. So I am thinking that we're going to continue again slightly higher. If junk debt continues higher, I think the stocks will do the same thing. Now we are seeing interesting developments here, and this is Treasury bonds. So 20+ year Treasury bond fund. This is considered the safest investment. So Treasury, long-dated United States Treasury bonds are considered the safest investment. Normally people buy them, or investors buy them during times of stress, basically financial stress, war, pandemic, you name it right now, supply disruptions. It's if you think in objective terms, there's enough reason to panic right now. So perhaps this is what's happening. We're now seeing a bid for Treasury bonds, and we did indeed clear this resistance on 21st of July, and then we gapped higher on 22nd of July. So overall, counterintuitively, we're seeing bonds rally, and I think in a couple of days we're going to see results of Federal Reserve meeting, and they're expected to announce an even higher rise to the Federal Reserve rate, effective Federal Reserve rate. Now, as you can imagine, the Treasury bonds, when they rally, that by extension means that Treasury bond yield is going down. So this is a 30-year government bond yield. So it topped out here on 16th of June and has been going down since then. In fact, on 22nd of July, yesterday, we stopped at 2.976%. So remember this number. If we look at 1 year yield, we're currently at 3.04%. So 3.04% for 1 year yield and 2.9% for 30-year yield. This is what's called inversion. So normally short-term yields are much lower than longer-term yields. In this case, it's the opposite. In the past, these types of events have led to recessions and by extension bear markets in stocks. So keep that in mind. So again, this is experimental, I guess you can say. So what I was looking at here is this article about the dollar. So Bloomberg Dollar Spot Index, you can see here in white, and Federal Reserve Federal Funds Target Rate in this blue faint line. So to my unaided eye, it's very difficult to see any kind of correlation really here, because sometimes Federal Reserve rate is going up and the dollar is going up. Sometimes Federal Reserve rate is going up, but the dollar is going down, for example, here from 2016 to 2018. So I'm like, okay, you know what? I'm going to just plot everything together and see what it looks like. And so this is what I did. This is a symbol from TradingView. It's Fed funds, so effective federal funds rate at the in this pink or bright purple color. On the bottom here, we have what's called correlation coefficients. So how well does Federal Reserve funds rate correlate, or does it do the same thing as the dollar index? So dollar index here in green, Dow Jones here in blue, and at the bottom here we have what's called CRB Commodities index. So I don't see really good correlations. I mean, there's maybe a slight negative correlation between Federal Reserve funds rate and Dow Jones, but there's really very little you can, determine from this correlation coefficients. They're very, very tenuous. I don't see that well. I don't see how we can use it to see the future or find out what we should be doing with dollar or gold or whatever. So my answer is that I would just not worry about this, honestly, and concentrate on the chart. So let me show you what I mean when we talk about concentrating on the chart. So since this article talked about the dollar, we're going to look at the dollar index, and it will kind of become very obvious to you what's happening. So it's a pretty obvious chart, right? So sometime in the past here until July, this is a weekly chart, W. So each candlestick is a week worth of activity. So where I'm hovering, you can clearly see this breakout. So we had a close above this blue support resistance line. That's my lines here. And this is actually all I needed to know. So on 19th of July 2021, I had a signal, and this is really what I was saying the same thing, and I was sending this to my subscribers, so you can actually see it here. DXY, this is a daily chart. You can see a whole bunch of alerts here, and actual alerts. Now, this dollar run, it's huge. It was really, really big. Was it fueled by what? What was it fueled by? It was fueled by the fact that other currencies are even worse. So I think with currencies, because of the nature of the way they're traded, like for example, USD JPY, we're trading them as currency pair. So it's not that, I hate yen or I love dollar. It's just the way the relationship goes. If the upper part of this equation is getting bigger, stronger, then this currency pair will move higher. That's all there is to it. With the currency index, there's some weighted. So there's euro, there's Japanese yen, Swiss franc, British pound, and I think a few more currencies kind of move all together. So overall, obviously, it gained a lot. So why do we care? Is that because we trade gold? So gold, looking at gold, XAU USD, if the thinking goes, if gold XAU USD, XAU rather, is constant and the dollar does get stronger or weaker, then knowing what the dollar is doing, like for example, it's appreciating dramatically, then gold should be doing the opposite. Because once again, if the lower part of this equation, US dollar, is getting bigger, stronger, shouldn't it pull this currency pair lower? It's not necessarily what's been happening. So let's look at this correlation. So this is a correlation to the US dollar, and this is a weekly chart again. So we're trying to see if gold and US dollar move opposite directions. Do they move in opposite directions? If gold gets, if dollar gets stronger, gold should get weaker. If gold should get stronger, if dollar gets stronger, gold gets weaker, and vice versa. If dollar gets weaker, gold should get stronger. And actually, it's not a bad relationship. It's reasonable to say that. However, there are sometimes enormous, uncorrelated periods. For example, one of the very latest examples right there was from November of 2021 until very recently. We had positive correlation between dollar and gold. So do we worry about correlations? Yes and no. So when we trade, I would prefer to just look at the chart and avoid looking at other charts. But it's also somewhat important to know what the dollar is doing, because there is a decent amount of correlation. It's not great. I would say it's like, 85% maybe, something like this. But purely looking at this chart for XAU USD, I put in this line here on the lows from August 2021 and March 2021. So it looks like we basically came down to that level this week and then rallied. Previous to that, we had, I'm going to look at daily chart of gold. We were selling it short. I had a position myself, and I exited my short position with a nice profit. So I shorted it right there on 30th of June, and I exited like right there on 14th or 13th of July, right there, which is still a very nice profit. Right now we're possibly bottoming, so this is possibly a bullish engulfing between 20th of July and 21st of July. We had a follow through on Friday, but this follow through wasn't really great. Kind of sold off by end of the day. So we'll see exactly what happens. Maybe we're seeing the bottom in gold. By a pretty good extension, we can say that we're potentially seeing the top in dollar. Okay, so this is a little bit of a roundabout analysis. Let me know what you think. Does Federal Reserve fund rate influence the markets? If yes, how so, etc. Very briefly, Bitcoin didn't really go anywhere. However, current situation is that I think we're rebounding from the lows, and I think we have some upside left. Especially notice how the indicators are kind of curving down. In my previous experience, this usually means that we're gonna see more upside for Bitcoin, potentially to like 34,000 rather, possibly, because that's where the strong support resistance is at the red line. Okay, that's it for this week's recap. Head over to MasterChartsTrading.com, click on sign up for one of the products again. So I have 2 products and 2 packages. One is trading indicators. The indicators are these lines on the chart. They will simplify your life as a trader dramatically, because you can know exactly if you want to be buying or selling. So the trend is a trend up or down, it will tell you. You will also know at what price level to buy or sell, and you will also know at what price level to take profits and move your stop to entry, simply by having these 4 lines on this chart. And if you are ready to sign up, head over to Master Charts Trading, and these are trading indicators that are available for TradingView. So once you register on my site, it's $29.95 per month. I will open the door for you on TradingView.com. Just send me your name of the account on TradingView. If you don't understand something, please send me a message. I am very quick to respond. You can click on contact, help, and I'll respond. Newsletter also newsletters rather are available. So I have 2 newsletters that come out. One comes out at least daily and once a week at the end of the week, because we have a weekly recap video. And the speculator comes out whenever there is a speculative stock that there is an update, for example, a new long position or a new opportunity to buy or sell. So that comes out on a few times a week, I guess. But you will get daily summary and weekly summary as a video as well. And if you need one-on-one sessions, then you're in luck, because I have VIP access at $259 per month. I think, again, it is very helpful because you get 60-minute one-on-one screen share per month. But I think the biggest best seller is the both trading indicators and newsletters at $59.95 per month. It's the best deal. Additionally, as you have undoubtedly heard, there is now inflation going on, and the federal fund rate is going up, so they're fighting the inflation, and unfortunately my costs are also increasing, so these prices most likely will again go up. So while they're still low, lock in your prices. That's it for this week's recap. And again, if you have any questions, please let me know. Thanks for watching, and have another great trading week. Bye bye.